What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as always. Today I'm going to do something a little bit different. I just have a couple of things a couple different points that I want to make, and then I'm going to give you an update on one of the properties that we looked at. So if you watched the fractured condo video, I had some outstanding questions. They answered a couple. I'm going to give you answers to those. Not going to look at a new property today, but I want to talk to a little bit about some of the advantages or just two specific advantages that I've found now, particularly on Lofty, and I think Arc 7 will probably have this if they ever develop um, their marketplace a little bit further. And so two advantages that exist that I didn't really think about ahead of time when I got into this. And so if you remember, I've been doing these videos about fractional real estate investing. I primarily started getting involved in these because I have a lot of clients or potential clients that aren't quite ready to get their own investment properties yet. And I was looking for something that I could recommend and say, hey, this is some place you can get some real estate exposure. You might be able to learn a little bit about real estate investing until you have enough money to buy some properties on your own. I still think that's primarily, the use case for this. I think for the most part, like if you have enough money to house hack in your hometown and deals work, that makes sense. If you have enough money where you can buy whole properties in markets that you're happy with, like I still, my day job is still just having, helping investors from out of state buy properties in San Antonio. Like, I mean, I still fully believe in owning whole properties. But the more that I dig into fractional real estate investing, the more I start to see there are some real opportunities. I still believe there's, real platform risk. There's risk. It's a new product. Is it really going to still be around in 10 years? What happens if platforms go under? That sort of thing. And I think that there are, answers to those questions, but I think it's still a risk that's out there. Um, and so, I've only been putting not a huge amount of money on any of the sites and I'm experimenting. But one of the things that I've realized, I think, and I've talked about, I'll definitely put more and more money on ground floor over time, as long as it performs the way I expect it to. And it seems to be so far. Um, I've mentioned several times, I find opportunities on Lofty that I think are really interesting. And so eventually I'll start making some big bets on that site as long as the smaller ones go the way that I think that they are going to go. But some of the things, so the more I get into it, the more I think that I will devote a larger portion of my own personal capital to these sites over time. And maybe at differing time periods. And so and you can see I've got mortgage rates up today, right? I'm just on the Mortgage News Daily website. Um, the Fed came out, they dropped rates a couple days ago, but in turn, mortgage rates have gone up. This is not really what people expected, but um, there's a discussion about rates. It might be the last rate drop in a while. Maybe they're going to need to raise rates next year. So for all these reasons, the long rates have gone up, and that's one of the things that when you're buying real estate in real life, you're kind of, especially if you're doing it, you're trying to doing it regularly and programmatically, like not just I buy a property every couple of years, but if it's something that you do, I have some clients that they want to buy 4 or 5 homes a year, or they want to buy a couple of fourplexes every year, or whatever it is. Um, Years where interest rates go, where they've doubled from prior years, it becomes very difficult to do that. And so that's one of the things that I've realized with especially the marketplace properties on Lofty, like the stuff that's existing, not their new ones that they come out with, but ones that have been sitting on here for a long time. They already have debt in place. And a large portion of the properties on here don't even have debt anyway. But a lot of them do. But that debt structure, it doesn't change just because mortgage rates change. And so I can buy today and get the benefit of whatever the financing structure was when they first put the deals together. Now, we've talked about the debt structure that is the most common one used on Lofty, where it is, the debt is paid outside of the cash flow of the property by one of the co-owners that brought it to the site. And so it's not, it's not exactly, a perfect analog, but it's still, I can come in here today. The fact that rates went up, a quarter point over the last week or two, it doesn't matter at all, right? I mean, what I'm buying on here now, it might have changed the price a little bit, although so far this is an extremely inefficient market, and you're not seeing things like that have any impact on the price of tokens that are, being bought and sold. Um, and so that's a real advantage, right? It might be in certain times when, rates make it tough to actually go out and buy a property in the real world, which, this year coming up might be a tougher year. I think we'll still do plenty of short-term rentals because, the cash flow on those often still makes sense, at least here in town. Then there's like the new construction deals where where builders are buying down your rates a significant amount. Those still might make sense. But if you don't have a deal that you can put together in the real world, you can buy into one of these that's existing already. And you're not worried about what's the debt structure going to look like today, what's the pricing of it going to be. If you have a wild swing, right? Like if you had a new property under contract and you hadn't rate locked, well, first of all, you should really talk to your loan officer and ask them why they didn't, why they didn't advise you to, right? But other than that, it's you should, you might be looking at a much higher bill today than you were looking at, just a few weeks ago. And, this wasn't the biggest move, but there's been times in the last few years where we've seen some really big moves in short periods of time. So that's one advantage I wanted to point out that I haven't really thought much about, but is really cool that you can buy. You're basically buying the real estate with the debt as a package. It's out there. I'm not having to deal with the financing. I think that's a huge advantage. The other one is the operating reserves. If you look at every one of these properties, um, well, I think that they actually, let's see if they keep the charts on this one. So it works a little bit different. With these co-ownership properties, but and that's one of these. But let me see if they have the. I still think they. Let's see. Yeah, we've got our operating reserve chart. You can see, okay, you've got $5,000 in this one. Whatever it is, it's not really as much as you might want there to be, but and it's one of the things where like some of the deals that come about on this site are because those reserves are being replenished, and so there's not the payout. But whenever I've been looking at my returns on this site, I'm looking at this as a whole, right? And so the fact that there is an operating reserve inside of there, but I'm still making the profit that I'm calculating and expecting to make and have been on several of these properties. Um, this is actually a much lower return today than oh, it's because I own it for cheaper than this, I think. But sorry, I'm all over the place. You can tell I'm still not feeling well, but I wanted to share these couple of things. So, in any case, if I'm buying properties in the real world, typically I want to have, between 6 months and a year of mortgage payments, the principal, interest, taxes, and insurance in a reserve, right? Like, and if you're buying, once you own a whole bunch of properties, you might not need that times every single property. Um, but you might want something close to that, especially if all your properties are in the same market, or if you have, relatively thin cash flow. Depending on what your portfolio looks like. But in any case, you're at any point in time, if you're primarily investing in properties in the real world, you have a significant amount of cash reserves that you really just need to have sit there doing nothing. You might put it in a high yield savings account. You almost shouldn't even put it in CDs. I mean, I know people handle it in all different ways. A lot of times I just leave it in a checking account, making very little on it and have just kind of expected, oh, well, that's just, it's part of your deal and you got to just figure it out when you're doing the math. And I think that most people, though, ignore the cost of the cash reserves that they have to hold when they're doing their math on their deal. One of the things that's good about these deals is that you're forced to include it. And so any of the returns I get on any of these properties, it's already baking that in. And so I think that that's an advantage. It's sort of just forcing you to be a little bit more honest with your deals. Because I mean, most of the investors I know, most of them hold cash reserves, but they don't think about the fact, when they look at their return on investment on their property, they're not taking that reserve amount and using that as part of the equity, part of the investment of the deal. And so, like, for example, if I were only investing on this platform and nowhere else, I'd have no reason for a cash reserve for the properties, right? Because um, there's never a time that I'm forced to make a capital call. They will do dilutive capital calls for properties, and you just lose some of your equity, but there's not anything that could go wrong that would force me to have to put money in. Um, and most of the time, what the property owners are doing is actually just borrowing money from the universal lending DAO. And so because of that, it's not a type of investment where I need to have a bunch of cash just sitting around. And so for me, I kind of like that. I never really, um, even though I know you need to have reserves when investing in real estate, it's never been something I'm a huge fan of. Like I've thought of it as always, somewhat of a problem of the deal, right? Anytime you have to just sit on large chunks of cash, um, it's a safety issue. Like I think that it's the right thing to do, but at the same time, and when you're doing your math right, obviously you're including that in the cost of your deal. But it's something like that most investors ignore it, and so that's a advantage of investing in this manner that I hadn't really thought much about, right? Like so two big things that at some point both of those I've thought about a little bit going forward, but I don't think I've really called it out. So I want to mention that. And the only other thing I wanted to do today is just give you a little update. I did this fractured, I did that video and uh, on this condo that is on the marketplace. Um, and, I told you there was that little note about fractured condos. And so it made me think, does he own more? And then I looked up and he does own a whole bunch of them. So I'd asked the question, how many of these do you own overall altogether? And I think I basically had found them all. He said 23. Um, so that was interesting. He does plan to bring more onto the platform if this works out. Uh, you know, I was glad to get positive answers to both of those things. One that he was very forthcoming, even though maybe it's not super easy to know. Although I think what didn't take a whole bunch of sleuthing to realize that he owned a bunch of them. But that, and then I asked him for some more information about the HOA's financial situation and their insurance, and he uploaded a couple of documents. I actually have follow-up questions for him now, so still not pulling the trigger on this one. Although I did think those were favorable answers. I like that he's going to bring a bunch of these or multiples of these onto the platform, because I don't want to be in a situation where it's just like he's just got one or two, and it's like those are the properties that are the last ones to get filled up, right? Like ideally, we get a little piece of all 23. Um, I don't know, that might be a little bit weird, but over time, and then maybe that gives him the ability to go out and accumulate more of them. I mean, that's the discussion I wanted to further with him. But I just wanted to update that because I know when I went through that video, I left those as sort of open questions, and then I mentioned that I had asked, haven't gotten a response yet. That's really it for today. If you don't mind liking and subscribing, I would appreciate it. I always forget to ask that until the very end, but at least the end came early today, so you get a break from me quicker. Sorry about the 40-minute video yesterday. You can tell I'm into investing in condos. Or there was something else. Oh, and then as usual, links in the description below to all the places that I'm investing on currently. If you haven't jumped into some of those sites, feel free to use those to check them out, and maybe you get some free money depending on their programs at the moment, and maybe they pay me something again depending on their programs at the moment. I have noticed they don't stay the same all the time, so make sure you do your own due diligence on that. Uh, I think right now the free tokens on Lofty aren't working. Maybe they're going to be again soon, is what I understand. I think that Mogul and Ground Floor both are asking you to make some sort of deposit and investment for them to work. I'm sure about it with. Actually, I think both of them are right now. I'm pretty sure. But anyway, look into those. Those are all the ones, and again, just because I have been putting money on some of these platforms doesn't mean they're the right answer for you. So you definitely want to think about your own situation, get some advice from a professional if you feel like you need to, and if you're not sure about it. I'm just here to try to share the info that I have, what I'm doing, and then some insight into the real estate itself, which is where I think I can help out. That is it for today. Don't excuse me. Until next time, I'm going to keep making mistakes so that you don't have to.